Hi, welcome to Neppy Invest. So, quarterly cash flow reports are coming in a little bit more than a trickle, what they did a week or so ago, but we are halfway through the month and we're starting to see those Appendix 4Cs come in a little bit more consistently. And this is one of those Appendix 4Cs today, a company called VTI or Visioneering Technologies. It's not a new company, it's been around about 3 or 4 years on the ASX. It is an American company that did list on the ASX. But haven't really been following it too close because the share price has been in a bit of a downtrend, and the cash receipts, although they're being slowly going up, I don't think the market has really taken a liking to this company up until recently. So this company deals with contact lenses, sort of new and improved contact lenses, disposable ones if I remember correctly, and they're trying to create contact lenses that suit especially children with myopia or nearsightedness, and that's a fairly exciting area they seem to be focusing on, mind the pun there. So let's get stuck into it. Let's look at the Appendix 4C for October 2020. So they list their numbers in American dollars because they are American based, and you can see the first column there, which is the current quarter, and you compare it to, they also have the 9 months to years to date. So you can see right at the bottom there, the net cash from operating activities, they only bled about $106,000 this quarter. But if you look at the year to date, the 9 months, they did bleed $4.8 million in cash. So what they've done in this quarter is they've really cut back on the costs. So they've had some cost-cutting initiatives which have pared back those costs. And you see that a lot in recessions where companies become more leaner. They cut back on a lot of costs, become leaner, and as the economy comes out of recession, they've got really good margins and they can make quite a bit of money that way. So VTI seems to have gone down that route in the last quarter. But if we look at comparing how they went this quarter to previous quarters, we can see a general uptrend. So if you go back to when they IPO'd in April 2017, they only had $90,000 in cash. It's been generally going up. Some quarters been slightly lower than other quarters, but they've gone from $90,000 in cash receipts in April 17 to $1.8 million in January 2020. Then COVID-19 hit and they did regress back to 1.1 last quarter, but this quarter they've hit back and those cash receipts have gone up. So a good trend here. This is the sort of trend I like to see, nice and slowly going up. And some of the brief details, mostly financial details here. So gross profits have increased from 41 to 46%, have $3.8 million in cash. US accounts have increased to 2,173. When repeat customers says 112%, that means those customers are tending to spend more. That's why it's more than 100%. And I've already mentioned their cost-cutting and saving initiatives. Now, I think a lot of these won't be permanent. We're going to see some of those costs coming back. For instance, payroll costs will start to increase from January 2021. So they did let go some staff and other staff took a pay cut. And those pay cuts will be going back to what they were before COVID-19 the next year. They curtailed inventories, so they should increase inventories, which will mean they have to spend a little bit more. And they did delay some projects and product launches, and that you would think those delayed projects and product launches will be, they want to bring those back in the next few months or next few quarters. So more than likely we'll see costs coming back, but hopefully the cash receipts and the revenue will start to increase as those costs coming back as well. Chart-wise, no, they did, I forget what price they listed at, but they did get as high as something like 40 or 50 cents back in 2018. So you can see they went from 40 to 50 cents in 2018 all the way down to a low of about 1.3 cents or 1.2 cents in June this year. But since then, there's a little bit more excitement coming to the market. You can see spikes in volume on the below charts. Those green bars are spikes in volume. That means someone's buying up, and we're starting to see the sentiment shift with the share price starting to move up. Those moving averages have now turned around too. This 4C was released, I believe, on Tuesday, the 13th of October. So we've seen this little bit of positive sentiment return with the release of the 4C, and it's got up to 4 cents on Wednesday the 14th of October. Went up 11% that day. And it seems like 4 cents is a bit of resistance. If it can break through 4 cents, that will be quite bullish. So I've put this now on my watch list to have a good long watch at or look at. And we'll just see how it goes over the next few days or next few weeks. But it looks quite bullish for those who are owning this right now. So that's all I've got for VTI, a new company on my watch list. And I look forward to see how they go through the next few years at least. And who knows, I might pull the trigger and buy a little bit of VTI in the next few days or next few weeks, depending on how they go with the share price action. If you have any questions, leave it in the comments section. And I'll probably do another few videos today on 4C action because quite a few companies are releasing their quarterly cash flow reports. And I think I might do one video per release. So have a good day. And that's all for today. Talk to you later. Or maybe not today, but for this video anyway. I'll talk to you later.